What's going on, you guys? My name is Kyle. I'm a full-time futures trader and founder of Opinicus. This video, it's actually a clip. It's a quick segment from a recent trading mentorship group where a member of the group is asking me about avoiding what I call drift. Drift is that slow, choppy price action, which is typically directional, but you're not seeing those nice momentum base moves that we all like to be involved with. Now, personally, I hate trading drift. I try and avoid it at all costs. I don't think that there is great edge in that drift kind of action. So here are some of the things that I watch for to avoid drift and some of the things that I look for when analyzing kind of some of those more late morning or midday trades where you will tend to see more of the drift type of action. Now, another note here, if you are watching this video before November 29th, which is next Friday, we are having our Black Friday sale starting next Friday. We only run one sale per year. This is it. It'll be live for 4 days. So Friday, Saturday, Sunday, and Monday. If you're not on our email list, highly recommend jumping on the email list, which you can find at our website, or just tune back into the website on Friday. The sale will be live then. If you have been interested in checking out the mentorship group, the Traders Think Tank, the 2-Hour Trader, or even our one-on-one mentorship program, this is your only time to do it at a discounted rate. Hope you enjoy this video, and let's jump right into it.
What would you look for as your signal bar if, let's say, there's a level of interest that I'm watching, but prices just slowly approaching it, like chopping to it? What kind of signal bar would you look to then get involved, if even?
I really hate the drift. If price does that drift into my level, I tend to not want to get involved as badly, and so I'll look for any sort of confluence in that area. And then typically in those times, I want to see a higher time frame signal, honestly, like something on like even the 1 minute, 2 minute, something like that to really solidify the trade idea, because it's too easy to get trapped on like the 15-second in that drift. There's just not a lot happening there. And so the drift can be brutal. You got to be careful. Got to be careful with the drift. I do think the best ops are always going to be with some sort of velocity. I mean, look at later today. Like, this action is just incredible. It's so good, so good. And again, the market's moving, right? The market is moving. So ideally, I can just wait for ops like this and not have to worry too much about the drift. Like, look at this type. This was prior day low, I think. Look at this sort of action. Price just drifts here. Awful, awful. And so, in a scenario like this, if I want to get a long prior day low, I'm probably going to wait for a higher low. Like, show me a change of character on the drift, and then if I really want to get involved, I'll ride the drift in that way. But if we had a level right here, this is a perfect example, actually. Let me delete this. Let's say we're using prior day low as our level. Look how just slow price comes into this thing. Garbage. It's just gonna. This is kind of what I was saying to Timmy earlier. Like, we want proof that buyers are stepping in. This is not proof to me that buyers have no interest in this. There's no, it's like low, no interest there. So the drift, like, caution is warranted. If you find yourself getting caught in the drift a lot, or trade's not working, where price is drifting beforehand, that's something to start tracking. See how often you're getting in action that is just kind of drift, especially if you're trying to counter trend. Like, it's bearish today and you're trying longs and drift lower.
Yeah, that's what I was gonna ask you about. Actually, what if it's on a trend day and you just get, you know, 50-60% of a pullback, but it's a slow one. It's just a drift type of pullback.
On a bullish trend day.
I mean, maybe not like a trend day and how you're thinking of it, but just a more of a bullish day.
Yeah, that's different. Like I think the what price is showing you for the session is very important with how you enter, right? Because on a more bullish day, you can get away with some of those drift entries. Like you can typically be okay in a B quality trade, right? Shorts are going to be much harder on those types of days. Same thing on a day like today. Longs are going to be harder. You got to be in the right location. Don't get involved with the drift.
Right,
But
right. And
if buyers are there on the session and the structure is bullish, it's a little bit of a different scenario because of backdrop and kind of how price is unfolding for that particular session. That's a really good nuance there. Good question.